Hello, everyone. How are my warrior friends, my trading warrior brothers and sisters, everyone here at TradeGATEHub.com. I'm Dale Pinkert, aka Coach. I'm a player coach because I don't just sit on the bench. I want to let you guys know we're sponsored and powered by TradeGATEHub.com. And I wanted to start off that before I get to the markets, talking about a lot of people that are beginning in the trading industry ask me the best way for people to get involved and, so that it doesn't turn into, financial ruin or really upsetting their lifestyle. And what I would recommend is first, not trading live. So in the old days, you would paper trade, and now we have demo accounts. So you open an account at TradeView, a demo account, and you also get yourself a journal, and you trade demo for a minimum of 3 months. Now, you may not know how difficult it is not to take risk because you say, well, some of my demo trades wish I would have been live. I woulda, coulda, shoulda stuff. But if you don't have the discipline to not trade live for 90 days, it's not a good sign for your career, okay? Because this is really something that, before you graduate, you have to go through a process. So you do that, you journal your trades, you're voracious about taking in insatiable appetite about information about trading the markets, and technical trading is what I gravitated to. There's so many great books out there about it. And then you find a style that suits you. Are you a day trader? Are you short term? Are you trying to position trade? And you do this all on your demo account for 3 months. And then TradeView has micro contracts, mini contracts. In fact, I'm going to be talking to the people from the small exchange out of Chicago on Thursday. Frank will be with us, and you can learn more about that. So then you trade, very small, micro, mini, half-size contracts so that you have a little something on the line, but if you're using proper risk management, maybe when you're wrong, you lose $10, $15. So you're right, you make $40, $50. Okay, you're not going to get rich, but you'll still have money on the line. And you'll notice the difference, the transition from being in a demo account to your emotions being heightened by actually having risk and reward play in your head. It's all in our heads, guys. So, you do that for another 6 months, maybe the remainder of the year before you upsize, and you never upsize until you've proven yourself in the minor leagues that you're, ready to go in and play with hedge fund guys with, 8-digit accounts that are moving things around, and that you have a plan, that you don't deviate from it, that you're disciplined, that you don't move your stops because you don't want to lose. All the things that are major landmines in people's careers, blowing out their accounts. And you could do this and then learn with us here in TradeGATEHub. And, I'm a believer in intelligence gathering. So, whatever you gravitate to, I interview a lot of great guys that have services and teach. And we do it here as a service because this is the owner of TradeView's way of giving back to the trading community. The markets have been good to him. So we want to have a place for people to hone their skills. And I'll teach you here when I'm around here. And I am always posting if I have an idea. If I'm not posting, it's because I'm waiting for something. So let's get to the markets now. And the headline of this was Euro sells off as ECB underdelivers. Okay, so they're talking about they're not going to raise rates till July. It's my contention this is a very important bottom, and it's not just an opinion. But you know how when it's Friday, you look at the weeklies and you say, well, a weekly reversal candle is a big deal, right? So let's look at something even more macro. And since this is the last week of trading in May, I think there's one day after Memorial Day, but pretty much the month is close to being in the books. Take a look at this candle in the euro. It's a nice reversal candle off major support. So it's my contention that the sell-off in euro is going to be a buying opportunity. So here I'm going to go through the list, get ready, pay attention. And I'd be looking for initially halfway back's about 550, but I suspect that it'd be deeper to try and have people believe we still are going to parity. Remember, I talked about it when we were down here. Everyone thinks that we're going to go to parity, even though I thought down here, I own it. I thought we'd get one more low to flush it out. I also was on gold and silver, so it's pretty much the same trade. So these breaks that we're going to get here, I don't know for sure. I'm not short playing it, but I know what I'm going to do if it happens. So we get this big, we get this corrective move in euro down to 105, 550, 105, maybe 78 back. But in this zone, I'm a buyer looking for a fib extension of this move. So if this was 400 pips, which it was, and the next wave is 1.618, that's going to give you 640, which is, you know, going to take you up to the 111 level up here. And, you know, coincidentally, that's where that big wedge comes in. It'll be back above it. It'll be in the wedge. So, you know, back over this 110 level, which was important. We had this throw over, and now back over 110, you can declare a bottom. So we're not there to declare a bottom, but you know, I'm still going to trade it, anticipating the bottom with risk management, always trailing stops, always taking partials, always maintaining a core position. So it's pretty much the same. My other preferred long on this break would be Aussie. Aussie, really look how strong it is in comparison. It looks a lot like the gold chart. Gave up very little here. So in Aussie, if I had to pull back towards 69.5 to 69, I'm long. Initially with stops maybe 50 under here. I think, you know, I don't think the dollar is going to make a new high. Here's why. Even if it does, it's my bet that on all of these trades, that there's at least one failing rally, and even if the dollar is still good, it's going to pull back to this level. So even if you're long-term bullish, and I know a lot of people are buying the dollar right now saying we're going straight to 108, it's just going to blast. That I'm not in that camp. So I'd be looking to sell dollar strength, buy euro weakness, buy Aussie weakness, buy gold weakness, you know, maybe around gold around the 1830 level, all the way down to 1820, wrong under the low. Silver, any pullback into the mid to 21 level is a buy for me. So if we get this with the dollar continuing some type of rally, I'd buy this pullback. Earlier in the week, I said, it was Monday, I said take partial profits from the longs that we had back here. Okay, so I was a little early. There was one more push up, but I still think I'm going to have a better chance to buy, you know, the ones I took off. I think I'm going to be able to buy them at a better level, 1830, 1820. As I said, the off numbers all the way at 1810 in silver. Silver, you know, silver gold ratio is kind of a coin toss to me. Still looks like it wants to head lower. So, you know, again, we have to wait for this close under 82. Right here at this line, I think I need a weekly. And I just want to give you the rectangle case in the euro. So, you know, it's really got to close back under this 82.05 prior high breakout. This may just be a pullback before we, you know, make another run. But if you're a gold bull, especially if you're a silver bull, you don't want it trending up. You want this to be a top. But I wanted to show the euro on a monthly because, you know, it's a classic case of a rectangle. And you'll see how I'm able to come up with objectives that, you know, maybe I need to be stabilized, but you have this huge rectangle between 103 and 123. So, you know, really, this measured technically without any opinion. We take out these lows. I'm out of long euros because it's a 22,000 pip formation. You know, that would take it to 93. But we break out over 123. We're looking at the mid 140s on that. Okay. So the first challenge is to get back above the 110 level. Good start, reversal month. Because of this reversal month, I'll buy a pullback in these currencies. And so, you know, I'm glad we're seeing this correction. Still think you got to buy these metals. The shares are holding up okay. Oil is an enigma to me. I talked to Shy Girl, and you know, she is still bullish. She can't come up with anything that would take it. She has this formation. This is it, the descending triangle. But she's saying the only thing that could ever take it down under 94 would be such a severe recession, and it creates so much demand destruction. I said, well, that would take a severe recession. I said, because, you know, people have been locked up for a couple of years. They don't care what gasoline. They care. They'll care more in the fall when they look at, you know, what they spent on their vacations, you know, twice as much, but they're going to go. I mean, there's more to life than money. You have to find some joy and, you know, and fun, right? Now, I think what we do for a living that's fun. What do you guys think? High stress, but fun. I still enjoy it after all this time. So S&Ps, maybe that was the bottom. When I left you on Monday, I said I wouldn't buy this. I'd buy a pullback. I was talking 38.60, 38.50, never got there, got to 74. I guess close enough for government work. I want to see the semis looked vulnerable to me yesterday. They have to close good here. Also, the NASDAQ is reversing with a lot of divergence down here, but you know, what's the catalyst? I'm not sure what the catalyst is. I think the market needs a failing rally in the dollar and a sense of the dollar could bring about some relief on a lot of companies that are stressed just by, you know, supply constraints. And then, you know, the strong dollar, if they're trying to sell into international markets where there's weak demand, makes it more difficult for them. But I know a lot of people think that was the low, the second drive here, and it could be. I believe that your first short-term signal of it doing something right would be to close over this 4 hour. To take a look at the daily. I think there's one at 39.60. So there's a 9 right here. But you know, whenever I see this 1 and a 2, the fact that I've seen so many 1s and 2s turn into 3s, you know, when people go, well, wasn't this enough? We got every stop in the world out. But you know, people have had a couple days to, sure, they came in Monday and they were glad we held yesterday, and they're hoping that yesterday's lows hold. But when I look at this, because of what I've seen in patterns, I have to wait and see if there's a 3 down there. It will not confirm in any way. I don't, unless it's a crash. But I mean, just marginal new lows, 37.80 or so. You know, that would be worth a spec. With that divergence happening, maybe, I don't know, maybe it's after the Memorial Day holiday, we'll see. But I'm going to wait for a 3. If I miss it, so be it, because there are many times that 2 is enough, right? You don't always have to have 3 drives. Sometimes it only takes 1 good divergence, and you know, maybe this was it on that sneaky rally after everyone went home for the weekend, thinking that the market was down sharply and there'd be follow through early this week, in the following week. So copper, doesn't look great, but again, I was talking to an analyst today, and she said, pull out the monthly, and you have a very defined range in copper, right? Like, short term, it looks like, it's topping out here, but anything in between this range, $4 and $5, you can scalp it and trade it. But if you're telling me which way it's going to come out of this sideways consolidation, you're Nostradamus. You might have a bias, but really, the trade is short under 4, long over 5, and don't make it any more complicated than that. And that way you have confirmations, and then you're always alert for a fall signal. If you go with a breakdown and then the breakdown is negated, you're gone, right? That's your contingency for the trade. That's a signal. Let's see, anything else really worth talking about? Yen's popping a little bit. So, the yen pop, it almost got to this line. It's really, a grinding, I was saying earlier that I really have a hard time catching these if they turn into major tops, because I look for a lot more violence at the highs instead of this grinding corrective nature. But last week I was talking about these rallies keep getting weaker and weaker, but we're approaching some of this confluence on this red speed line. It's a shade under 26. So I would say that over the next few weeks, my game plan is to sell strength in the dollar, buy weakness in euro and Aussie and gold and silver and the miners. And I'm going to stay focused on the dollar and precious metals because that's enough. That's about, all I can handle. So the miners too, maybe we get, they don't look terrible. Newmont doesn't look terrible, as long as these levels are very important on the daily. Look at where Newmont held. GDX is underneath it, but I'd buy a fib retracement in the miners. The silver is weaker. The weakest silver stock actually looks like this is going to make a new low, if I'm right about another 70 cents in silver. This is First Majestic. I'm not sure if this one will. If it does, it won't confirm, but it could be a flag. But I'm looking to buy a fib on this one, and I'm looking to buy a fib on this one. Actually, Fortuna Silver Mines, which is a junior, I think it's in the SILJ, had a real nice advance, even better than EXK. So see the difference in velocity. It's not a different chart, it's not a log. So I'm going to be very interested where this issue is at, when and if silver trades 22, under 22.5 to 22. So everyone, good luck. Good luck with the Fed minutes. I don't know if they're out yet, but those are my views. Tune in tomorrow, especially if you're, you don't have $1 million to trade, and maybe you only have, 10, 15, 20 to learn about different instruments that would be more suitable for the kind of capital that you're trading. And remember, most of all, don't just count your pips, count your blessings, everyone. This is Dale Pinkert at TradeGATEHub, powered by TradeView Markets. Adios.